Good afternoon, my friends. It's time. Your boy here, D-Money, in the house. Things getting a little dicey. It's time for some truth missiles. While we get this thing started, I'm going to tell you a little story. Probably the most freaked out I've ever been. My wife and I, we went on a baby moon. So she was like 6 months pregnant. We thought, hey, this is the last chance we're going to travel. We were right. It was. We went to Switzerland. Ended up going to some of the French Alps there in France. It was really, really cool. Really, really cool trip. At one point, we were on a bullet train. Quick story, but it has to do with this story. So, this world's longest, deepest rail tunnel closed after derailment. So we're on this thing, and I love being on trains. It's fun. But then we go into a mountain. So it's literally just pitch dark. And all of a sudden, the train stops. Just stops inside of the mountain. Now, I'm claustrophobic. Okay, admittedly, I'm claustrophobic. For a long time, I couldn't even fly. So I'm sitting there on my phone just praying, like, please, please start back up and get through this. Please, please, please. And then I started thinking, because we sat there for like 30 minutes. I mean, it felt like hours and hours. It was like 30 minutes. I thought, okay, someone's hijacking the train. I need to get ready to fight. And so all these things are going through my mind, but she thought I was so cool. She was freaking out. She was like, gosh, I can't believe you were so cool when we finally started going. I was like, no, I was just freaking out more than I've ever freaked out before in my life. We were on that train right there, that one. And while we were sitting there, trains were passing us on the other side. You know, they were going the other direction, going like 250 kilometers per hour, while we were just sitting there and just shaking the whole train as they went past. Most freaked out I've ever been. In the middle of a mountain, pitch black. We were probably a mile into the thing. Crazy. So anyway, enough of that one. I won't even put that one. We're going to look at markets today. Things are getting dicey, guys. Things are getting dicey. Very, very dicey. I'll explain what I mean by that in detail. And essentially, there's a lot of selling going on. Bitcoin crashed this afternoon. We're going to look at that chart. Bonds have just struggled. Therefore, interest rates have been going higher and higher and higher. A number of people believe that we're going to see 8% interest rates, which is about another percent higher from here. Can the real estate market withstand that? So far, it has done well because of even though demand has dropped, inventory has been lower. Inventory has dropped more than demand has. Will this kick us over the edge and create more of a buyer's market, more of an opportunity type market, whereas sellers are still ruling the roost, even though rates are, double what they were 18 months ago and triple what they were from the lows? Sellers have still been ruling the roost. Will that change? If it does, the sad news is, if it becomes less favorable for sellers, buyers will think it's bad for them. Instead of realizing if it's bad for sellers, then it's good for buyers. You're on opposite sides of the transaction. It can't be bad for both of you. It can't be good for both of you. So if something's bad for sellers, it's good for buyers. Let's not forget that. Where do we begin is the big question. We're going to start with mortgage rates here. We'll go mortgage rates, real estate, crypto, stocks. So here's the thing. And I want to be very clear. I posted this yesterday. I am 100% bullish long-term on real estate. As bullish as Warren Buffett is, although I don't have $790 million to invest in home builder stocks like he did. But I'm just as bullish. I do believe real estate prices, if you could go in a time machine 5 years from now, you would look back and go, how was a buying opportunity? How did we not realize it? How did we not realize it? Warren Buffett making huge investments in real estate. We had very low inventory. We had a situation where, it just sort of was known that real estate values had been attacked from every direction and had held ground so well. It was so obvious we should have pulled the trigger. And I think if you fast forward any further, you're going to find the same thing. Should have pulled the trigger. But hindsight always 2020, right? So I just want to make it clear, I am long-term bullish. Now, let's talk about some of the short-term realities. Mortgage demand dropping week after week. Interest rates now at a 22-year high. What does that look like? Well, probably can't see it. I'll tell you. This is Mortgage News Daily, 7.37% for a 30-year fixed. We're now into the sevens for FHA and VA. Even on the ARMs, the jumbo ARMs are up in the mid to high sixes, even on the ARMs. So some of these rates that I locked last week, they're looking amazing. Even though at the time we were like, gosh, just swallow the pill, just push the button. Now it's like, whew, glad we did it. Glad we did it. From an analysis standpoint of what's going on in bonds here, I will say the only thing that I like about what I see on this chart, and there's very little to like here, very little to like. It is not pretty. The one thing that you could point at is that this right here, this week, these 4 candles very much look like what we call controlled selling. In other words, it's too perfect. So all trading, I hope I'm not bursting anyone's bubble, but all markets are traded and the market makers utilize algorithms, computers, to actually do the trading, to actually transact. I know this for a lot of reasons. Most people know this. One of my good friends, the smartest guy I know, who's a literal genius, he writes some of these programs. It works for people who in Chicago who do this. And so one of the things about the programs is that they have to be sort of perfect, right? There's nothing random about it because it's created. And so you can see these channels here. And this type of downward channel, when you see this in a stock or whatever, it usually means that this controlled selling is actually buying. It's a buy sign that we're going to make a bottom. Now, we don't know how long this could go on for, but if it breaks this trend line here, it should go up. Now, that said, we have a long ways to go just to retest the moving averages that have been rejecting us like crazy. So it wouldn't necessarily be a bullish sign if we just get back up to there. But knowing that that's 100 and some basis points to the upside, just to even still be bearish, is somewhat comforting. That means we could get a relief rally kind of regardless, even if conditions do remain bearish. So hopefully we'll see that, because when these bond prices go up, that means rates are going to go down. Okay. So I don't have any good drawing tools with this chart, but that's what's going on here. So perhaps we could see some more bond buying. These guys don't think so. What I wanted to point out on this one is they interviewed Lawrence Yun. He said if the 30-year fixed rate mortgage can hold at this area and the 10-year can hold at 4.2, then, and this would be the higher, then that would be great. He's basically saying like that's the best case scenario. If it breaks, then you're going to see mortgage rates go to 8%. So he's basically saying we're on the razor's edge. It's time for this thing to turn around, or we're going to see 8%. Mortgage rates could rise significantly if global investors demand higher yields for fixed income assets. This is a deputy chief economist at Moody's who told MarketWatch this. Currently, and this is what I've been pointing out, currently the spread or the difference between the 30-year fixed rate mortgage and the 10-year treasury bond is around 300 basis points, which is elevatedly high. It's way higher than it normally is. It doesn't make sense. It reeks of manipulation. Just absolutely reeks of it. Hated it. But our markets are manipulated, and there is no way to argue that. That is just a fact of what's going on. Now, tomorrow, Friday, options expirations for the week. And we also have on the economic calendar, no news. Expecting a choppy day tomorrow. Tomorrow will probably be one of those days, if you watch the stock market, it'll go up. It'll come all the way. We get a full retrace, maybe go all the way back up. It's probably going to be all over the place. but the end of the day, it'll probably end up close to where it opens. That's my guess for tomorrow. There's going to be a lot of volatility. They're going to try to shake a lot of money out of the tree. That always happens on Fridays, always happens on option expiration days, major option expiration days. You have the week, month, quarter. And so whenever you get those, it's extra volatility expected. Okay. So I'm kind of expecting that from a stock perspective. Now, I did want to show you this too, because I always pull up the Altos research reports. And I just want to show you how to actually go. So you go to altos.re. You don't need an account to actually pull up those reports. You don't have to subscribe or whatever. I don't know if this is a hack and you're supposed to have an account, and I just figured out how to get there. I don't think so. But you just go to product, hover over that, market reports. Go down here, run report. Opens up a new window, and then you just tell it where you want to go. So I always use San Diego, California. Now, you can see here, a lot of the statistics in the marketplace are going to show increases in activity, and they're going to look pretty bullish. It looks like the market action index, though, back down to where it was about 3 months ago. So it peaked up a little bit, almost got 74. Now it's back down to 70. That's still super duper seller's market. If you look at the median price, new list, it's over $1 million. Price per square foot, $720. Peaked at 772 though, back in June. So, we have seen a decline in price per square foot. We're going to look at that more closely. Your average days on market, still doing really well at 47. That's also on the decline. Price decreases is on the increase right now. Relisteds is ticking up a little bit, and inventory is ticking up a little bit. Still very, very slim, but ticking up. What's also interesting is watching rents go down, watching rents trail down a little bit. The market is just seeming to be ready for some sort of change, and it's sort of just happening. I'm not super bearish, but if we do see, let's get this down to price per square foot real quick. If we do see 8% mortgage rates, then I do think we could see more buyer favorable terms happening. In other words, prices coming down, potentially some more price reductions. Sellers not having as much to choose from. Now, some of the buyers that I'm working with right now, if you're watching this, they're like, what in the hell are you talking about? We just lost out on a home that had 21 offers on it. Who are you talking to? Like, certain price points, detached homes, under $800,000 in San Diego proper, that's going to get a lot of attention. It really doesn't matter what the interest rates are. It just doesn't. So for people who are trying to buy right now that are, tight budgeted and maybe getting down payment assistance or getting a gift or using all their cash, and they just can't do any of these things, remove contingencies, blah, 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 appraisal gaps, all that. You're really looking on the market for properties that have been on the market for a while, and just, seeing if you can catch a bid, just see if you can catch something. There are some motivated sellers out there. There are some properties that are not moving. And when we get to this type of place in the market, usually buyers who are paying top dollar, they're expecting top product. And so if it's not top product, they're probably not going to pull the trigger. So if you have a listing that's sitting, if you're trying to sell your home and it's sitting there, it is all about price. Listen to your agent. Trust your agent, for goodness sakes. If you don't trust them, don't hire them in the first place. If you don't trust them, you've already hired them, let them go. They're there to do a job. You have to trust them and let them execute, because they will know more about what's going on. They'll be the ones who are asking for feedback, and then they come to you and they try to sugarcoat it because they don't want to hurt your feelings, but they know the truth of what's going on. So let them do what needs to be done. At the end of the day, if you don't get the offers you want, if you don't get the price you want, you don't have to sell. But just know the reality right now is it's very tough for buyers. Very tough for buyers. And if it gets easier for buyers, that would mean that it's going to get worse for you as a seller. So just keep that in mind. All right, let's look back here. All right, we got through that one. Price per square foot. It's a little fall off here, but still higher, than we've been in the past 3 years, really, other than just back in June. Average price per square foot there. This could come in more. We could see this come down a little bit. That's entirely possible. There's just so little inventory that it's hard for the market to take much of a dive. So many people waiting in the wings, and there's so much pent-up demand on the sidelines. I think of all the things we're going to discuss here, we're going to talk about real estate, crypto, and stocks. I think real estate by far will fare the best, even if rates go to 8%. Because on the crypto side, on the stock side, things are getting pretty ugly. Things are not looking so fresh. Let's see. Let's start there. And by the way, we're live on Facebook, LinkedIn, Twitter, and YouTube. So if you have a comment, want to post a question, please feel free to do so. There's some, I don't want to scare you. Talk to your financial advisor. This is not financial advice. I just want to tell you what I'm seeing, and I'll tell you what I've done. How about that? Is that fair? Everyone knows, because I posted it on Facebook, that I sold my Meta at $295. Actually, it was $296. So I sold Meta. I posted $295, but I actually sold it at $296. So I sold it at $296 over here because, like, hey, it's over. It's over. I got 2 bearish fair value gaps in a row on daily candles over here. It's over. This is crazy run. Look at this run. Look at that. This crazy run is finally over. I bought Meta all the way down to $95, started at $200, had a great cost basis. Like, look, I'm getting out with almost a triple here. I'm good. Okay, $296, give me my money. All right. And then what happened? Boom, right afterwards, earnings popped up to $325. So I missed out on $30 a share. And I kind of felt stupid. But now you can see why. That was all just a fake out. That whole earnings blip right there, that was a fake out. Meta is now finally, after all these months, how long have we been in this channel? For goodness sakes, crazy. Go back to December. So 8 months plus we've been in this channel and finally out of it. And that looks terrible. This looks terrible. Now, just today, off today's price action, we just finally have a break of structure, because you could still say this is a lower low. Here, let me get a better tool out. My trading view has been acting really slow and kind of sloppy, so hopefully you can see this. You can see this is still a higher low, right? And things are moving, but now we have the lower low. So although it may pop back up a little bit, probably to this order block right here, it might pop up to 298 or so if we get a rally. And I do think we could see some rallying tomorrow, a lot of back and forth, a lot of volatility I'm expecting tomorrow. And really for the next few weeks probably, but tomorrow especially. If it does pop back up. So once we have that break of structure, so lower low now, after all these higher lows, we finally have a lower low. Now I'm expecting a lower high to get put in, and then the real dump. So you see what I mean? It's kind of could just be the beginning of this. And Meta is not the only one that's seeing this kind of action. So I'm out of Meta completely. I don't own any of it anymore. I sold it $10 higher than it closed today. I shaved off some Tesla. We'll look at that. And then we'll look at the S&P. We'll look at Bitcoin. So on Tesla, remember we were showing this downtrend line intersecting with the upper channel and how like it just had to go lower from there? Well, it did. And so I sold a chunk at 255 right in this region here. Sold a chunk, about 25% of my holdings, hoping to buy it lower. Now I'm really looking and expecting. I was going to purchase here, but it was such a weird day when we got down there and we had an official break of structure right here. It's like, all right, dang it. I do expect it to rally back up at some point here, probably in this 215 to 205 range as it gets to this guy. This trend line also coincides with a couple daily fair value gaps over here on the bullish side. So probably bounce back up at least to the 21 EMA, maybe to the midline of this, because we're still inside of this channel. So when that bounce happens, may shave off a little bit more. I do think Tesla could get dragged down with the rest of the market as we are in a bloodbath at the moment. Now, it's, as you can see, it's come down quite a bit. I mean, we were at $300 a share or close to it, 298, 299. So it's come down quite a bit already. So I don't know that it really makes a whole lot of sense to sell it here. I'm not telling you to sell it here, but I do think that if it pops and you see a nice number on there, you want to sell it in the 255, range, 270 to sort of take some profits. I think that would make sense, but I think it's too low to sell right now. It's actually approaching a buy zone. So I'd be careful right there. Don't get dragged into that. Overall, let's look at the daily here on the futures account. Yes. All right. So I've got a lot of levels mapped out here. You don't necessarily need to know what all this means. Long story long. We have a break of structure. We have a macro break of structure here. And we've had one for a little while up here. This is the first one. As you guys go, oh, well, that's kind of one. Yeah, now we're under the 21 EMA pretty comfortably. I do think that we'll see a bounce tomorrow. I do think we'll see a bounce tomorrow for people who are a little skittish or who might be thrown off or scared by this. When we see those bounces, that's when you want to shave some off. So if you're like, oh, I might want to shave some off. Hey, I've got some profits here or there. Wait for a bounce to do it. Don't sell when it's red, and expect volatility. Expect back and forth. You can see the candles here. We were just, as we were going up, sort of climbing nice and smooth, just grinding higher. This was our first indication. This day, Thursday, 27th of July, showed us that, hey, something funky's going on here. And we should probably expect some downside. We got the fake out, run out, back up to the monthly bearish order block, and then boom, hit pretty hard from there. So I do think we probably get a green candle tomorrow, maybe a somewhat flat candle, but there's going to be some volatility. It might pop back up a little bit. Now, this overall is a terrible look. There's a long ways to fall. If we zoom this out to, let's call it the weekly, you can see here, there's a huge march up, which ended in January of last year. And then we have this bear market sell-off until October. And then we've just been grinding higher since then. And now this is the first time that we really have seen a consecutive sell-off. And there was one right here. It came back into a bullish order block and then went higher. And so there is a lot of different support areas. And this is part of the reason why I believe we'll see a bounce tomorrow, because on the weekly, the 21 EMA is just about 13 points below where we are here. So even if it sells off down to there in the overnight or something, I think it will bounce off of that. And there's also a daily order block down here at 50 if we get that low. So we should see a little bit of bounce here, but overall, looking super bearish. And we're delivering from a very bearish area, which is a weekly order block from years ago. So that is not a great look. Now, the Bitcoin flash crash that's going on currently, we'll take a look at that. Let's look on the daily. So Bitcoin had been grinding higher. There's a trend line. You can see it, and everyone had their eyes on this trend line. Hey, what's going to happen? Bollinger Bands on Bitcoin were the tightest they've ever been, ever. I can't believe that. Bollinger Bands have got the tightest. There's volatility coming. Now, if you're long Bitcoin, and that's funny because I actually text a buddy of mine today, and I said, hey, be ready to buy Bitcoin when it gets to 24,000, 25,000. There's a huge liquidity pool down there. I didn't know it was going to be today. How could I, of course, but I know there's a liquidity pool down there. The good news is, if you're long Bitcoin, whenever there's a volatility implication, such as tight Bollinger Bands like that, whichever direction it goes first is usually fake. So it doesn't usually just take off and go in one direction. There's a liquidity grab, okay? And then it turns around and goes the other way. Now, I'm not saying it's done going down by any means, and I could be totally wrong about that. But if you look at what's happened so far, where did it come down to? Bullish order block right here, okay? So this is taking like a split second. This is a bullish order block. You can see that's exactly what it dipped into. And a lot of times when there's a fake out, whether it be a trend line or volatility, it goes to an order block. And because the order block is where the institutions want to be purchasing it goes to that, and that's where the reversal takes place. So until that order block gets violated, I'm still feeling good about it and actually believe that it should be purchased if you are wanting to purchase, say you've never bought Bitcoin, or you're looking, hey, when's a good time to get in? That would be a good time to get in my opinion. And that's what I'm doing. You do whatever you want, talk to your financial advisor, etc. But that is what's going on. This looks very familiar to me. I've seen a lot of charts. I know that all these markets are manipulated. I know a lot of the tricks that they use to manipulate. These trend lines are what a lot of traders will use to trade off of. They'll be buying that trend line because they're expecting it to continue higher. They will get smoked out of their positions, and the institutions will push the price down with a very small amount of leverage, and then they will scoop up coin right here as all these guys are panic selling. And that's what it looks like so far. Now, there is a lot of liquidity down in the 24,000 region down here, so we could see this all get violated. That's totally possible. If it is, I will become more bearish if that happens. But as of right now, it just looks like a fake out that went to a very common place and is likely based on something that's coming. Now, we know there's a lot of ETF applications, a bunch of big companies, even like BlackRock has applied for a Bitcoin ETF. Grayscale, however, has been litigating for their ETF conversion. And they posted something. I should have pulled this up on Twitter. They posted yesterday, Grayscale did, that, hey, we're hiring for our ETF division. And then eyes, right, in the post. So they're not supposed to say anything. They probably know that that lawsuit is coming to a conclusion, that they're winning against the SEC, and they will be able to turn GBTC into a spot Bitcoin ETF, which means that the GBTC itself will go up a lot immediately. It would go from 1853 today to 2660, just like that. So what is that? Almost a 50% increase, 40% increase overnight. And so that would be very good for crypto as well. Bitcoin would probably rally hardcore off of that. And if they approve Grayscale, then they have to approve BlackRock, Fidelity, and all the other people who have gotten in line for the Bitcoin ETF, which will bring lots of money to Bitcoin to send the price higher. So it's possible right now that this little fakie right here, if it's a fakie, would be because there's good news maybe coming even tomorrow or next week about a Bitcoin ETF approval. Should be huge, 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 huge. I've noticed that when we see these kinds of moves in the past that look similar to this, that make sense to be a potential fake out, a liquidity grab before we go the other direction, that usually it's followed by news. You see it in both directions. When I was looking at the volatility and looking at the Bollinger Bands and seeing how tight they were, the biggest thing that I was concerned about is, what if it goes higher first? Because the way that markets work and the way that the algorithms that trade the markets work is they like to fake out one direction. They like to go grab liquidity and generate liquidity before they go in the direction that they want to go. So I'm glad to see that it went lower first, because that's just how markets work. Now, it doesn't mean it can't keep going lower, but that's what I wanted to see. This is so far exactly what I wanted to see as someone who's long Bitcoin. Okay. I'm not really charting Ethereum, but basically same kind of situation going on there. Same kind of situation going on with Ethereum and with the dollar. We've seen the dollar in this big downtrend. It has broken that. So that just recently happened in the last few days. The big downtrend channel that we've been in since September of last year has finally been broken. Finally been broken. It makes you kind of believe that the Fed is going to raise rates a little bit more, or at least that the market believes that. And I think that is a big concern, and part of the reason why we have people saying this. Fed minutes were also released this week, and it looked like they're still very concerned about inflation, which would make sense why we're seeing some of the things we're seeing. Either way, I think it's time to be cautious with investments. I think stocks could have a lot of downside potential just because of the fact that we've been on such a run for so long. It wouldn't even have to be fundamentally the case. We just had such a big run. It could be some volatility, some downside until we finally found a bottom, and then We could go higher again. But I do think that could be a little ways from here. It could be 100, 150 S&P points from here. That's a lot. That's a lot. So I just want everyone to sort of be prepared for that. On the crypto side, very good chance it's a fake out, and there's very good news coming on the other side of it. We could be wrong about that. There's a very good chance that that is what's going on. So let's pay close attention to that. See what happens, particularly when the New York session opens tomorrow and we get the first few hours. Maybe we'll see some news on a Bitcoin ETF. That would change the game, be at 30,000 like that. If that's the case, maybe it may be higher. And when it comes to real estate, market's still holding on very strong, but it's really a story of inventory. And we're seeing the same things that we've seen for the past 3 years, really. Inventory is the story. Just simply meaning that the lack of homes for sale is really dictating everything. There's so many more people who want to buy than there are houses to buy. It really creates a weird market where the right home will get 20 offers in the first 5 days. A home that's overpriced, that isn't desirable, people aren't willing to pay top dollar for, will just sit there. It's this bizarro market space that's driven by lack of inventory. And that, my friends, is why Buffett is betting on real estate. Now, I would not short real estate ever, but I particularly wouldn't do it now. Well, nobody shorts real estate, do they? Sure they do. Michael Burry is very short the stock market right now, too, by the way, guy from The Big Short. Of course, he's been really short the stock market like 7 times since he made the big bet on housing that went well for him, and he's been wrong every single time. But he is short again in a big way. So, you know what we say where I'm from, even a blind pig will occasionally find a mud bath on a hot day. Maybe he's right this time. Maybe he's right. Could be. It looks bad to me. It does not look good. I don't like the way the stock market looks right now. But for real estate, Buffett is betting on builders. Why? Builders, we're going to do well in 2 different kinds of markets. One is a thin inventory market. Builders do really well. Typically, in most places, this isn't really true in San Diego, so we don't have that much new construction. New construction dominates over resale in most markets. You go to the Midwest or whatever, people would much rather buy a brand new house. And especially if the prices are similar. So resale has to kind of lower their prices a lot, and the new construction costs a lot more, but that's what everyone wants. So in low inventory markets, builders are going to win. Also, in really hot markets, builders are going to win. What we have right now here today is a tight inventory market, which is setting up a very, very hot market when rates come down, which they will eventually. They don't have to, I guess, but they will eventually. But remember, the Federal Reserve's goal was to slow things down. They want deflation. Deflation means negative growth. That means they want and need and are attempting to achieve pain. So we're not going to balance out inflation without pain. And I believe some of that pain may be upon us, unfortunately. So whether it be in stocks or crypto, or perhaps even a slowdown in housing, maybe sellers won't be able to get top dollar or get all these bids. Maybe things will slow down a little bit for sellers. That would be good for buyers. If you're a buyer, you should see that as an opportunity. When the market gets worse for sellers, it just got better for you. So keep that in mind. If you see opportunity, take it. If you're a buyer in this market, I'll leave you with this one important piece of advice. If you're a buyer in this market, here's what you need to do. You get yourself pre-approved, okay? And you look at the market. You keep your eyes, okay? You keep your eyes peeled on the market. You look for opportunity. Look at homes. Stay attached. Wait for stuff to hit the market that's perfect for you. And then you attack. If you can get yourself into a position to be able to do that, whether you're living month to month in your rental or whatever, put yourself in a position to be able to pounce. That's how you have to navigate this market. If you end up having to buy in this market with a gun to your head, hey, our lease is up in 28 days. We got to buy something. That is not the situation you want to be in. And look, I know rates are high. High sixes, low sevens. Rates are high. 2-1 buy down. There are solutions. You can always get a wholesale home loan rate with me. No lender fees, no points, no BS. I'll shoot you straight. You can guarantee it. All right, my friends, stay tuned. If things do get ugly, if there's wild stuff going on, I'll be broadcasting. Have a great night.